Let's add VWAP to the chart. Let's talk about VWAP for a second. It's an introduction to VWAP. It says volume weighted average price is exactly what it sounds like. The average price weighted by volume. But let's talk about it. Let's break it down. I don't want to use big words. We're going to keep it simple. Okay, how many of y'all use VWAP? That's these, let me see if I can make this bigger. This orange line that you see going through these candles, it's VWAP. It's the VWAP line. Now, let's talk about it. Say it with me, y'all. VWAP. VWAP. Volume weighted average price. Now, don't let the name scare you. All right, it's the average price of a stock for the day. It's the average price of a stock for the day, but it takes into account how much was traded at each price. Okay? This is the VWAP. The line that's going through the chart. All right, so, and remember, it takes into account how much was traded at each price. So if 1 million shares traded at 650, that matters more than 100 shares traded at 655. Huh? Let's talk about VWAP. I hope y'all can see my screen. But yeah, if 1 million shares traded at 650, that matters more than 100 shares traded at 655. Look at that line on the chart. Y'all see this line on the chart? The orange line? This single line cutting across the price. That is VWAP. And here's the most important thing I want y'all to remember. Big banks, hedge funds, institutional traders, all the whales, they use VWAP as they benchmark. They say, did I buy below VWAP or did I buy above it? So the simple rule is this. If the price is above the VWAP line, okay? If the price is above the VWAP line, the bulls are in control. The bulls are the people that think the price are going up. They more than likely buying, okay? That's a bullish day. You want to look, you pretty much want to be looking for buy trades. If the price is below the VWAP line, the bears are in control. The sellers have the advantage, okay? And you want to be looking for short trades or staying completely out that day. But pay attention to whenever price is above or below VWAP. And here's something beautiful about VWAP. When the price pulls back to that line, let me go down to a smaller time frame. When the price pulls back to that line, y'all with me? And bounces off of it, that is one of the cleanest entry signals in all of trading that you're going to get. You buying at the fair price of the day with the trend behind you, right? How many of y'all made money with VWAP already? Let me know. Let me know in the chat. Dino, what up? One more thing about VWAP before I go on to the next one. You new to trading? Okay, well, these are indicators. Indicators are tools that you use to help you form a decision on what direction is going in. It's just a tool. So we're going to look at some real charts. I want to give you some real examples so you don't be confused. But this one is called VWAP. It's volume weighted average price. Excuse me. Again, VWAP resets every single day. So this is purely an intraday tool. Okay, when the next trading day opens, VWAP starts fresh from zero. You can use it on your 1 minute chart. You can use it on a 5 minute chart or a 15-minute chart. You can use it for day trading. You want to use it for day trading. Yeah, it is. I'm about to see what the fuck is going on. Isabel, your ears are good. Hold on. I don't know what the hell going on. Somebody probably trying to steal a catalytic converter or something. I've been seeing a lot about ICC, says Rocky. EMAs go by days, says Isabel. Is VWAP similar to EMA? EMAs go by days. Okay, so the EMAs are the exponential moving averages. VWAP is the volume weighted average price. The only way they are similar is because they both are averages. Okay, so they both, y'all remember how they used to have us come up with an average in school, right? So they are both averages. Now, again, the earlier in the day that you are, the more the VWAP moves around. By the afternoon, it'll stabilize. That's normally how VWAP moves. We'll talk about, anybody still got any questions about VWAP before I move on to Bollinger Bands? We'll talk about Bollinger Bands now. Let's talk about Bollinger Bands. Y'all here? Everybody here? Melanie, what up? Okay, we'll go on to Bollinger Bands next. But yeah, when you messing with the VWAP, if the price holds above VWAP, the buyers are in control. Look for long trades. If the price is below VWAP, sellers are in control. You can use it as an entry zone too, because when the price pulls back the VWAP and bounces, that's a great low risk entry point, and you can avoid choppy and back and forth crossing between that VWAP. It means there is no clear direction. All right, so we'll go ahead and move along to the Bollinger Bands. Let's talk about Bollinger Bands. All right. Now, I like this one because once you see it, it just makes sense visually, right? Look at this chart. Okay, we see the lines that's wrapped around the candles. Do y'all see the lines that's wrapped around the candles? Right? Okay. Those are the Bollinger Bands. You got a top line, you got a bottom line, right? And then you got a middle line. The middle one is just the 20 period moving average. This is the average price over the last 20 candles. Now, here's the key insight I want y'all to walk away with for the Bollinger Bands. Those outer bands are built from something called standard deviation. Standard deviation. Now, it's not a fancy way to say that the bands show you how far price normally moves from the average. About 95% of all price action will stay inside of these bands, y'all. What up, Melanie? What up? Yeah, so when you know something like that, this is what you want to think about. Imagine a rubber band. All right, imagine a rubber band. When you stretch the rubber band, in real life, when you stretch a rubber band, when you stretch it far in one direction, what happened? It snapped back, right? Now, that's exactly what price does when it reaches the outer bands. You see what I'm saying? When the price reaches the outer bands, like it did here, and like it did here, but when it reaches the outer bands, that's when you want to pay attention. When the price touches the upper band, it may be stretched too far, too fast. You want to watch for a pullback. When the price touches the lower band, it may have fallen too fast. Okay? See how it touched the lower band here? So when price touches the lower band of the Bollinger Band, it may have fallen too fast, and you can watch for a bounce. And literally, that's what happened. And literally, that's what happened here at the top of this band too. It snapped back just like a rubber band. Okay, that's how I look at Bollinger Bands. Now, my favorite part, when the bands get really, really tight. When they get really tight, let me see if I can find a spot. When the bands get tight. Look at here. It get tight here, it get tight here, it got tight here. Anyways, when it gets tight and close together, that's called a squeeze. The rubber band is coiled up, and that means a big move is coming. The price can't stay down forever. It can't stay calm forever. And just know something about the pop, right? So, Bollinger Bands is something that you can add to your chart. You can use it with something else, but I wouldn't use more than like 2 to 3 indicators. Some people feel they chart up with indicators. You don't need all them damn indicators, all right? Now let's go to the next one. Anybody still confused about Bollinger Bands? Bollinger Bands are volatility bands placed above and below a moving average. Volatility is based on the standard deviation, which changes as volatility increases and decreases. The bands automatically widen when volatility increases and narrow when volatility decreases. Okay? This dynamic nature of Bollinger Bands also means that they can be used on different securities with the standard settings. For signals, Bollinger Bands can be used to identify M tops and W bottoms or to determine the strength of the trend. Bollinger Bands consist of a middle band with 2 outer bands. The middle band is a simple moving average that is usually set at 20 periods. The simple moving average is used because the standard deviation formula also uses a simple moving average. The look back period for the standard deviation is the same as for the simple moving average. The outer bands are usually set 2 standard deviations above and below the middle band. This introduction here told you absolutely fucking nothing about how to use the Bollinger Bands, right? A lot of people will read this and walk away with zero comprehension of what the fuck they just read, right? So that's why I do what I do. I come here to try to explain it and break it down and make it simple, because everybody like to make shit so complicated. I don't get it. Now, y'all, anybody still confused about the Bollinger Bands? Remember, it's like a rubber band stretched out. You know it's about to snap back together, and when it's tight like that, you know it's about to. It can't stay down forever. It's a big move about to happen, whether it's to the upside or downside. That's what you can use another indicator to help you figure out. So, with that being said, I'm gonna move on to the next one, which is the TTM Squeeze. Let's talk about the TTM Squeeze. Yeah. All right. Now, TTM. Where we at? Let me go ahead and pull it up. Let's take the Bollinger Bands off, and we'll put TTM on now. First of all, TTM Squeeze is a volatility and momentum indicator introduced by John Carter of Trade the Markets, and that's now called simpler trading. It capitalizes on the tendency for price to break out strongly after consolidating in a trading range, a tight trading range. I find indicators interesting because they were all created by someone. Somebody created that indicator that you use. You can create an indicator too, ladies and gentlemen. Right? We all created equal. What somebody else did, you can do it too. You never know. You might create something better than the Bollinger Bands. You might create something better than the trailing 12-month squeeze. But we'll go ahead and add the TTM Squeeze so I can go over it. Let's add it to the chart. Now we got it on here, and that's what you see down here at the bottom. Let's make it big. Let's pay attention to the this right here. So this is called a TTM Squeeze, trailing 12-month, and I'm gonna teach you how to use it. All I want to know is y'all paying attention. Everybody that's paying attention. If you're paying attention and you haven't followed me, hit the follow button right now so I can know you locked in. If you locked in, drop a W in the chat so I can know you locked in, y'all. Or tap the screen. Come on, let me get some engagement. Let's go. Let's get it started. Okay. I see my championship winners in the chat. All right. Thank y'all for coming to class. Let's go. This was made popular. TTM Squeeze was made popular by a trader named John Carter. Now, once y'all understand this, you will never want to trade without it. It be like that. My guy Chad put me on this last year. So look at the bottom panel on this chart. You will see these bars. Okay. Turn my volume up. All right. You see these bars. Some of them green, some of them red. Right? That is the TTM Squeeze histogram. This is called a histogram, y'all. Histogram. This is the TTM Squeeze histogram. Now, you might also notice some dots along the zero line. Y'all probably can't really see them. Y'all can't see them. But when you use this, you're going to see some dots. All right, so how can I explain this? Some of them going to be blue, some of them going to be green. Either way it go, these dots is everything. You want to pay attention to them dots. I don't see them, but just look at these lines here. It's blue here, it's yellow here. Watch this. Let me explain something to you. All right. The TTM Squeeze is going to tell you when a stock is coiling up. Y'all know what the word coil mean? Everybody remember the slinkies? Y'all know what a coil, like a bed spring, okay? You ever took a pencil apart and seen a spring and you push that spring down? That is coiling. A spring being compressed. When the indicator shows red or orange dots, the squeeze is on, okay? Yeah, let me see. Okay, cool. It's showing me what everything is. So yeah, it'll still be red. Got you. All right, so yeah, either way it go, when you use this, when you use the TTM, it's gonna let you know energy is building. When you see like the price getting compressed, okay, a big move is coming and it ain't happened yet. It hasn't happened yet. Do not jump in early. When those dots turn green, the squeeze has fired. Now the spring releases and the price makes this big move. That's when you look for your entry. All right. See if I can get a better zoom in look on this. It'll look like that. It'll look like this on the bottom of the cell phone version. Okay, so it's just letting you know that the squeeze is fired. The spring releases now. The price gonna make its big move. That's when you want to look for your entry. The histogram bars is gonna tell you which direction. If those bars are growing green and going up above the zero line, all right, let's look over here to the right. There's a zero line on the chart over here. And this basically, the flat line is zero. This flat yellow line with the blue area and orange areas y'all can't really see. But yeah, this is the zero line. The histogram bars is going to tell you, right, which direction. If those bars is growing green and going up, like it's doing right here. If they growing green and going up above the zero line, the move is going to be bullish. If those bars are red and going down below zero, the move is going to be bearish. So the whole setup is you want to wait for the squeeze to build, wait for it to fire, watch which way the histogram goes, and then enter. As simple as that. It's not complicated. We're not going to make it complicated, y'all. Yeah, no, we're not going to make it complicated. All right. That's the TTM Squeeze. Again, I'm going to leave this on the screen for some of y'all who probably wasn't here to take notes. Yeah, it tells you when a stock is coiling, building up energy for a big move. It combines Bollinger Bands and Keltner channels to detect compression. The histogram bars show the direction and momentum of the coming move. Right? So you want to use this before earnings or before major news. It's great for catching the big pre-announcement squeeze. When you see price barely moving on the chart, you can check if the TTM show dots. Basically, if the squeeze is on, use a 15-minute. Let me see. Use a 15-minute chart, 1 hour, right? Or daily charts for the most reliable setups. Okay. Yeah, anybody got any more questions? about the TTM squeeze before I move on to the next indicator. We went over so far, all we went over was the TTM squeeze. We went over Bollinger Bands, and we went over volume weighted average price. Okay? We went over volume weighted average price, TTM squeeze, and Bollinger Bands. All right, no questions? All right, I'm going to move forward. So on the next thing on the list is the volume profile. Let's talk about volume profile real quick. How many of y'all ever heard of volume profile? We heard of volume, but what about volume profile? Let me take TTM off. Let's take the TTM squeeze off. Let's put this on a 5-day chart or something. I don't know. All right, now we're going to put the volume profile on. It's right here. VP. VP. What up, Adrian? Thank you for the gift. So VP is, let me move this out the way. Okay, y'all see these bars over here on the right? And you can make these whatever colors you want to make them to. Like once you add the indicator to your chart, you can like edit the indicator and make it to your liking, right? You can change the colors, change the settings if you want to. But either way it go, nonetheless, like this is the volume profile. We finna talk about it. Let's get into it. So this one changed the way I look at support and resistance. I don't look at support and resistance the same because it is. So let's talk about it. Look at the right side of this chart, ladies and gentlemen, with the bars. Okay, you see those horizontal blue bars going sideways? That is the volume profile. Okay. Hold on. Yeah, this is the volume profile. Now, each bar represents a price level. Okay, each bar represents a price level. I don't know if you can see. 686, 685, 683, 682, 681, 680, 679. These are all price levels. Okay. The volume, notice that it's not down here. See, these volume bars down here are showing you the volume at a certain date and at a certain time. But the volume bars over here now are showing you the volume at a price level. You feel me? Hold on. Do y'all feel me? Do y'all pick up what I'm putting down? Is everybody picking up what I'm putting down? Who is confused? Who is still confused? Because if you're still confused, it's okay. I'll answer a few questions for you, but you might need to start from ground zero, from the very beginning. We've got to go over candlesticks before we can even talk about indicators for some of y'all, right? And some of y'all missed the candlestick class, so you don't know how to read a candlestick chart. But you got to start there before you can even deal with indicators. Don't let none of this confuse you, but it's okay to take notes and soak this up and then come back and get the beginner too. But don't act like you confused and this ain't for you. Like, nah, anybody can pick this up. Anybody can pick this up. Now, think about it this way. If millions of shares is traded at $653, let's look at 653. Okay, boom. If millions of shares is traded at 653, what does that tell you? What does that tell you? I wonder if y'all can see that well. I hope y'all can. All right. What up, Jazz? So yeah, if millions of shares traded at $653, what does that tell you? It tells you that the price right there is extremely important to the market. Okay? The price right there at that level is extremely important to the market. That's why you want to pay attention to that level. lot of people bought and sold right there. It's a battleground level. Then you got the longest bar. Every time you look at this chart and you see the longest bar, that is called the POC, the point of control. That is the single most traded price in your time window. So the price love to come back and resist the POC. It acts like a magnet. Now, areas where the bars are long are called high volume nodes. These are high volume nodes. The price slows down at these levels. At these levels, you're gonna see the price consolidate. When it get to the longer bars, it'll consolidate. Knowing this information can help you. That's why indicators are used, because if I'm in a trade and I get an indicator that it's about to consolidate, that's great information. Before I get in the trade or after I done got in the trade, right? Either way it goes, it is great information. It's all just data. It's all data. But it can help you form a better thesis or make a better decision, a lucrative decision, right? One that put money in your pocket and not take money from you. And it gives you an edge because you're no longer guessing. You got all these levels, you got all these different confirmations, right? Indicators, the confluences. Now, the price is going to slow down at these high volume nodes, but those are your real support and resistance levels. Like, these are the real support and resistance levels. I told y'all, after I started using volume profile, it changed the way I looked at support and resistance forever. Now, the areas where the bars are short or barely exist, those are low volume nodes. The price moves fast through these. So there's barely any history of trading there. So you got buyers and sellers agree quickly, and then the price just rips through that shit. Like, that's what you want. That's what you want. Now, on the spot chart, on this chart on the left, look at where the volume profile had the biggest concentration of bars, that 652 to 656 zone. So look at where the price broke below that heavy cluster and then came back up. That it stalled right at that zone. Why? Why did it stall right at that zone? Because literally, that's where all the previous trading happened at. So the market got memory, y'all. It will remember. All right. Anybody still confused about the VP or the volume profile? It says when to use it. Finding true support and resistance. These levels are based on actual trading activity. Setting price targets. Price often runs to the next high volume node before stopping. So this is good for you. It's good to use VP when you want to set a price target or you looking for a breakout zone. And it's good to use on a 30-minute time frame, a 1 hour time frame, or a daily chart for swing trading or for day trading. But the key signals are the point of control, which is the busiest price, okay, the longest node, which is the high volume node, and then the low volume node, which is the short nodes, okay? Price gonna slow down at the high nodes. It's gonna speed up and go fast past the short ones. And then you got the target. After a breakout, price targets the next high volume node. That's how it's gonna go. After soon as it hit that level, it'll go back. It'll go to the next one. That's how you use the VP. All right. Now we're gonna go to volume. Let's go to volume. I'm gonna take VP off, and we just gonna talk about volume. That's down here at the bottom. These bars that's lighting up at the bottom. Y'all see it? All right, now you could trade with one eye closed as long as you're using volume. All right, volume is important. I want you to pay close attention here because this might be the most important lesson out of the whole class. Volume. Who could tell me what is volume? Let's see if y'all been paying attention. What's volume? Who in the chat can tell me what's volume? Sunshine said liquidity What up? What up, Luis? Anybody else? Any other answers? What is volume? Volume and liquidity is like brothers and sisters, sunshine. How many people trading? We got buyers and sellers. So we got some smart people in the chat, y'all. So check it out. Volume is the total number of shares traded in any given period. Volume is the total number of shares being traded in any given period. Don't never be confused about volume. On this chart, y'all will see it as these vertical bars at the bottom. All right. 1 bar per candle. 1 bar per candle. You understand me? Each bar got his own candle. So we know at a certain time how much trading was being done during certain time periods. This is not like the VP that was on the side that was giving us the volume for the price. This is giving us the volume for the time. Now pay close attention. I'm going to give you the golden rule. Okay. Green bar means buyers were dominant that candle. Red bar means sellers were dominant. Okay. Y'all see my screen still, right? All right, here we go. The golden rule of volume. Volume gives candles their meaning. Okay, a volume will give the candle its meaning. A big green candle with low volume. A big green candle with low volume. Let me see if I can find one. This might be a good one, because that ain't really a lot of volume, and not even a day later the price dropped. All right, so let's look at this one. This is a good one. All right, so yeah, a big green candle with low volume. That move is weak. It might reverse, but a big green candlestick with a lot of volume. Look at this one. This is a small candlestick, but look at the volume. Are y'all paying attention? Can I get some W's in the chat? Telly, what up, Telly? I was gonna send you the replay. I was gonna send you the replay. Okay, cool. Y'all tapped in. Y'all paying attention. Bet. So this is the important part. A big green candle with low volume means that the move is weak. It might reverse, but a big green candle with high volume, that move is the real deal, Holyfield. Real buyers stepped in with real conviction. The 1 second billionaire says, I make 1.8 million per second. What time frame are you trading at? All right, the 1 second billionaire who makes $1.8 million per second. I should be asking you what time frame you trade on. Right? Because I'm not making $1.8 million per second yet. You know what I'm talking about? I ain't making that yet. I ain't gonna say I ain't gonna ever make it, but geez Louise, what do you have to ask me? I'm gonna get back on topic. So you come here distracting me. Oh, gold futures. Oh, it's very possible. Super duper possible. I don't doubt you now. Them futures, I don't doubt you now. But what you do? What you shorted gold? Because gold just dropped the most it has since the 80s. I think gold hasn't dropped this much since the 80s. Don't take my word. Go look it up. Now we getting off topic though. I'm gonna stay on volume. Let me get this volume lesson out the way before I go to answering questions. Please hold your questions for the end of the class. I got y'all. Who remembers what I just said about a big green candlestick with a low volume versus a big green candlestick with high volume? Was y'all paying attention? Y'all want me to repeat it for the people in the back? Let me know. Should I repeat it or do y'all know? All right, I'll repeat it. Look, volume is the total number of shares that's traded at any given period. That's going to be shown by these red and green bars on the bottom of the chart once you put volume on your chart. When you see a big green candlestick with low volume, okay, the candlestick can be green as it want to be. It can be big as it want, but if it has a small green a small green volume bar, it's a weak ass move, and it's probably gonna reverse back down, or you know, it's just basically not, it's not official as a whistle. Let's put it that way. Now, if you got a green candlestick and it got a big green volume bar on it, it's letting you know that that's a real move. It's the real deal. So think of it like this: price is the car. The price is the car. This is the car, right? Volume is the engine. So you could have a car that look like it's moving, but without engine power behind it, it ain't going nowhere. Right? Volume is going to tell you whether that price move got real power or if it's just rolling downhill. Y'all get what I'm saying? Let me know if y'all get what I'm saying now. Let me know. Let me know. Let me know. I bet. All right, now I wasn't gonna stop singing to like a cat with a bat. Cool. So y'all understand volume now. Y'all understand volume? When you see volume spiking way above average, like here, this is volume spiking way above average. So if the volume is green and the candle's red, it's a good look. Nah, it's about the length, the real bluffing. It's about the length, right? Think about it this way. Look. It says how it works. High volume on a green candle equals strong buying conviction. The move is real. High volume on a red candle equals strong selling conviction. Sellers mean business. Low volume on any candle equals the move is weak. Don't trust it fully. Breakouts on high volume equals confirmation. Breakouts on low volume are likely fake. Volume equals the total number of shares traded in any given time period. Each candle on the chart has a corresponding volume bar right below it. So each candlestick that I show you has a bar that has a volume bar that's attached to it. Each one of these volume bars are associated with the candle. You will not see a red volume bar on a green candlestick. See, the colors match. You will not see that because one bar per candle, a green bar means the buyers were dominant that candle. A red bar means the sellers were dominant. You feel me? Now, again, we really want to pay attention to this shit. When you see volume spiking way above average on a big down candle, that is called a climax, a selling climax. So many people panic sold at once. Everybody starts pressing sell at one time, and okay, that the sellers exhausted themselves, and then the sellers run out. When the sellers run out, the price bounces. That volume spikes at the bottom of a sell-off. That volume spike at the bottom of a sell-off, that is often the exact low. So we just had that happen with SPY. I want you to check every volume on every trade before you enter. Every single one. This shit is non-negotiable. Do y'all agree? Do y'all hear what I'm saying? Do y'all hear the words that are coming out of my mouth? I'm dead ass. I'm serious. Do y'all understand what I'm telling you? Like, look at the volume on every trade before you enter. All right. Only one person? Marina, the only one that got it? Any questions? Don't be confused. I like to make sure y'all get what I'm saying before I move on now. I don't like to just go on without you. I would like to know that you get it. How to know if it's above average? Well, all right, so let's put it this way. Look at these candles. Look at these candlesticks down. Look at the volume. Look. Can you see the spikes? You can visually see. You can visually see the spikes. At about an average, the candles are, the volume nose is about right there. You can see it bluffing. You feel me? You bluffing if you say you can't see it. I need help and want to DM you. Life's a beach. There is absolutely nothing stopping you from doing that right now. What's stopping you from doing it? Inbox me. I'm waiting on. Call me now for a bumbleclot reading. Nah, for real though. Inbox me. Go ahead. I'm waiting on you. I'm waiting on you. Now we'll go to the next one since everybody got it. Everybody understand what I mean when we talk about volume now. So don't ever be confused about volume. And if you did miss the volume part, it's okay because I'm posting this replay on YouTube. Matter of fact, I'm gonna show y'all everything that we went over so far before I go to the next one. So tonight, this is the Indicator Masterclass, and we pretty much talking about VWAP. We went over VWAP already. We went over Bollinger Bands. We went over the TTM Squeeze, volume profile, and we just went over volume. And now I'm about to teach y'all RSI. I'm about to teach y'all what the RSI is and how to use it with the MACD too. Let's talk about the RSI. Volume. Here we go. RSI. So this is another good indicator to use. Let's go ahead and put it on the chart. Relative strength index. Let's get an introduction. This was developed by J. Wells Wilder. Remember, every indicator you ever use was created by somebody. Some trader made this. Do we get a copy of these notes? Yes, you do. Though these are the notes is on. You got to be in the Discord. I think you in the Discord, Miss Noel. It'll be in the Discord in the Learning Hub. Okay, you will be able to find this entire class in the Learning Hub, pictures included and all, the whole thing. All right, no doubt. So this was developed by J. Wells Wilder. The Relative Strength Index, RSI, is a momentum oscillator that measures the speed and change of price movements, blah, 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 Weebull. Let's explain it to him in my words. I don't want to read that. We're going to make this simple. We're going to make it simple. Let's add it to the chart. Boom. Now we got the RSI added. It's down here at the bottom. Let's make that bigger so y'all can really see what I'm talking about. Now that's right here. That's everything you see here. Let's talk about the RSI. You hit the link in the bio, y'all. You hit the link in the bio. You can come to the free side bluffing, but I'm gonna let you know now. The premium is where you want to be. The premium side is where you want to be. But come on in the free side. Don't let a little. You can make enough to make it to the premium. If you know, that's how we do it. I'm gonna hook you up. Free 99, real bluffing. Don't even worry about that shit. Come on in. I'm tired of people being afraid and asking the wrong questions. All right, it was $25 a month, but today's prices ain't yesterday's prices. You feel me? Why? Because we got value, real value, and people are seeing a return. So you know, everybody else come in there for free. They like flies on the wall. Y'all can do that too. Everybody can come in there and be flies on the wall. I'm bringing value now. Think about how much you've learned so far in this class. It's been an hour, and y'all ain't paid me shit. Y'all ain't gave me nothing, and I'm teaching. So don't think, if I'm giving this much for free, imagine how much value it's going to be. You understand? Once you actually support me. That's right, life's a beach. All right, I'm done talking. Let's go to the next one. I got more indicators to teach you, and you ain't gave me shit. All you got to do is pay attention and spend some time, and you're going to learn. So don't even ask me how much the premium costs. I really don't even got no more slots for the premium. It's all free shit for the rest of this month. If you ain't already getting to the VIP part, then you ain't gonna get in. It's just you gonna make money on the free side because I don't have a lot of time. And when people pay you, they think you work for them. They think you work for them. I got you, life's a beach. I'm just talking shit. Everybody that know me know that I'm just talking shit. I will help everybody in this chat individually. I don't give no. I'm just talking shit. I like to talk shit. If you ain't got tough skin, you're not gonna make it over here. I swear I'm just talking shit. And if you can get my direct line and I will answer the phone and talk to you for hours. Don't get it twisted. As long as you don't waste my time and you actually gonna execute the information, I'm available to help everybody. Don't get it twisted, y'all. Unless I'm just busy, you feel me? That's another story. We got 813 in the chat, ladies and gentlemen. 813 in the chat. They ain't here set tripping. I'm just playing, y'all. They ain't here repping the bird. Everybody take time out of y'all day to tell me where y'all repping, because we got the Berg in the building. 813 in the building representing y'all. Where y'all from? What city and state are y'all listening in from before I give y'all this RSI? Who we got? Notre Dame in the building, y'all. I'm streaming from Notre Dame, Indiana right now. About 2 hours from Chicago. About 2 hours from Indianapolis. We got Pomona, California in the building. 656 at the moment, but 727 for life in the building. Tampa, Florida. Colorado in the building. Okay. 318, Kim, what's happening? Sugar free. California love, Quan. Okay. So thank y'all for letting me know. Massachusetts. Okay, I did a show in Boston. I think I want to go to Boston again this year. I think it depends on if the people is nice to me like they was last year. We got Texas in the building. All right, y'all. I appreciate y'all for that. Now, relative strength index, RSI. I want y'all to think of this like a speedometer in your car, right? The RSI. A speedometer don't tell you where the car is going. Do it. No, it don't. What does it tell you? It tells you how fast it's moving, right? Let me move this over. So I want y'all to really understand what the RSI do. And let me get some better candlesticks or stretch this out or something, because this ain't telling us nothing. I want y'all to really see maybe a 4-hour time frame. There we go. So watch this. This one right here can really help you out if you execute the information. So let's say you looking at a chart and you see that you looking at the all-time high, and you see that they down right now, and the last time they was this level was back in November. Okay, the last time SPY was this price was back in November, and it bounced off this level and ended up going all the way to 695. If we was to bounce off this level, gee, that's a lot of money. Okay, these are previous. Let me hide all these drawings. That's a lot of money from here to here. That's a lot of money. Now, Fit Brown Woman said, "Yes, ma'am. What we have to meet? Oh yeah, y'all locals gotta make a bus pass soon, I guess. Back to 1970s oil crisis," says Dino. Right. All right. So the RSI. Here's what y'all need to know about this. It does the same thing for price. It tells you how fast it's moving. It measures the speed and the strength of a price move on a scale from 0 to 100. But notice that we got 70 right here, and then we got, y'all can't see, my mouse is so small. We got 70 at the top on the RSI scale, and then we got 30 at the bottom. So what happens is when you see the RSI down at 30, that tells you that the stock has been falling too fast, too hard. It's oversold. When the RSI drop below 30 or at 30 or below 30, it's oversold. Again, it doesn't mean it's going to automatically bounce, but the selling is extreme and the reversal could be near. Do y'all know how valuable that information can be for you in the middle of a trade? When the RSI gets above 70, the stock has been running up too hard. It's been running up too fast. That's called overbought. Right here, it was up right here. You see how the RSI was above 70? Okay, let me see if y'all can see it. Right here, the RSI was above 70 in this highlighted area. It was above 70, and sure enough, the price came down afterwards. Every time you see the price above 70, it's in they call it overbought. It doesn't mean that it has to drop, but it just means be careful. The engine is redlining and a cool down is possible. So it is very valuable to know when the price is about to drop. It's very valuable to know when it's about to rise. Now, these indicators don't guarantee you this information, but it does give you a confirmation. This plus this equals that, especially with this headline. You understand what I'm saying? We don't just guess. We don't guess. Yes, it adds to your confluence precisely. And your confidence too. A lot of people don't have the confidence to enter a trade, and it's because they don't know what the hell going on. Now you take support and resistance, your knowledge of price action with a couple of indicators and a headline or two or a big event, you got an easy trade, easy money, easy money. The market can be a money printer for you, or it could be a vacuum and take all your, and really you giving it away. You giving it to the market. It's really like a collection plate at the church. You handing it to the market. The market ain't never took shit from you. You gave it to it. But Fit Brown Woman, that's right. We want to build in a trading plan. So now that y'all know that those two numbers, the 30 and the 70, matter on the RSI. I'm going to say it one more time for the people in the back. When RSI drop to 30 or below, it is oversold. It does not guarantee that it's going to bounce, but you want a reversal could be near. When it's up at 70, it's overbought. It don't mean that it's going to fall, but you might want to be careful because it could come. Now, here's an advanced concept. Let me move this up so y'all can see. I want to make sure everybody get these notes, but I'm going to also have the notes available for those in the Discord. But look, the 50 level, right in the middle, right here, when the RSI is at 50 in the middle, this is your dividing line. See, RSI above 50 with the price trending up, bullish confirmation. RSI below 50 with the price trending down. So I look at the price and I look at the RSI level. I'm looking at both. I'm looking at the price and the RSI level to determine, like, yo, okay, this shit is above 70 right now, or it's above, my bad, it's above 50 and it's trending up, or it's below 50 and it's trending down. That's just extra confirmation. RSI below 50 with the price trending down, that's bearish confirmation. Now, here's an advanced concept too I want to teach you. RSI divergence. Who's confused about what the word divergence means? To diverge. So convergence is when two things come together. Divergence is when two things go away from each other. Right? I know you not, JoJo. Life's a beach. We gonna start you from ground zero. I'm gonna get up with you. I'm gonna answer your DM. Don't worry. We're gonna get you caught up, and then you'll come back and look at this, and it'll all make sense. Dino says RSI is going to 0, bro. He doesn't care that it's at 30. He's saying this shit's got more room to drop. All right. I've already done that, TikTok. Leave me alone. TikTok sending me messages, y'all. All right, so here we go. If the price is making a new low, let me see if I can find a moment on the chart where there was actual divergence happening, where the price was going in one direction. Let's see if we can put it on the 4-hour time. Oh, it's already on the 4-hour. The price has to be going up and the RSI got to be going down. That's called, when you see that happening, all right, it's called a RSI divergence. People usually like to use this with the MACD. That's what you want to use it with a MACD. Hey, coach, I see classes in session. Yes, it is. Ty, what's happening? So you can use RSI in accordance with the MACD. With the MACD. That's more advanced. I'm going to show you how to do it in a second. But more than likely, what I'm trying to tell you is if the price is making a new low, but the RSI is making a higher low, that's a bullish divergence. The selling is slowing down. And even though the price look like it's still falling, because right now the RSI just making lower lows. So these is making higher lows. Here we go. This is a good one. Let's put it this way. The price is right here, the RSI making higher lows. Right? The price is making a new low, and the RSI is making a higher low. Price made a new low here, RSI made a higher low. That is a bullish divergence. The selling is slowing down, even though the price looks like it's still falling. That hidden strength often leads to a big reversal up. So this is on a 4-hour time frame. And sure enough, you know, it made those, but it did drop all the way from 674 all the way back up to 692 afterwards. But yeah, you want to watch for stuff like that. I also use the RSI with the MACD, so I'm gonna leave the RSI up as we move on to the MACD. I'm gonna leave the RSI up so you can see how they work together like partners. MACD. This is one of the simplest and most effective momentum indicators available. The MACD turns two trend following indicators, moving averages, into a momentum oscillator by subtracting the longer moving average from the shorter moving average. Right? As a result, the MACD offers the best of both worlds, trend following and momentum. The MACD fluctuates above and below the zero line as the moving averages converge, cross, and diverge. Traders can look for signal line crossovers, center line crossovers, and divergences to generate signals. Because the MACD is unbounded, it is not particularly useful for identifying overbought and oversold levels. Now, this is the key part. It says the MACD is unbounded. It is not particularly useful for identifying overbought and oversold levels, but guess what is? What did I just teach y'all? What indicator is good for finding overbought or oversold levels? So even though I'm using the MACD and the MACD can't tell me, it ain't good for finding overbought or oversold levels, right? But I want to use, but the RSI is. So you see how they work together? Now watch this. Don't pay this no. This is just the volume bars. So let's see. All right, here we go. I want more candlesticks. Here we go. So this one is the RSI, and we know that it's below 30. And then we got the MACD right here. Is we see green and red on the MACD. Let's talk about the MACD real quick. Let me slide this up, because I know there's a lot of people still probably confused about what the MACD is. All right, so moving average convergence divergence. That's what MACD stands for. It's not a pimp name. All right, now say that 3 times fast. Don't worry about the name. I know it sounds long. Moving average convergence divergence. It's a tongue twister, right? But the MACD shows you the relationship between two moving averages, right? That's what these two lines are. The yellow one and the blue one. These are moving averages. When a faster average crosses above a slower average, the momentum is shifting bullish. Okay? And you can mess with your settings on there and show, okay, well, I want my MACD to be whatever color you want it to be. Okay? And my signal, okay, y'all can't see that, sorry. And my signal, you can make that whatever color you want it to be. For me, I got my MACD as orange or yellow, whatever you want to call it, and then blue. Now, you can change the fast length, the slow length, the signal smoothing, and the input source. You can change all that. I know it's kind of complicated, but it's okay, y'all. You just happen to be a beginner. That's like you like a first grader that stumbled into a 6th grade class right now, right? And it's okay. I got a class for your ass too. You just in the wrong class right now. So again, the MACD is gonna show you the relationship between two moving averages. When a faster average crosses above a slower average, the momentum is shifting bullish. When it crosses below, the momentum is shifting bearish. So look at this bottom panel. Look at the bottom panel on this chart. Look at the bottom panel right here, over here on the right. This is what we got. This is the MACD over here. You see two lines. One is the MACD line. Remember, I showed y'all my MACD line is orange and my signal line is blue. You see the histogram bars in the middle. The green, this is the histogram bars in the middle. The histograms show you the gap between those two lines, okay? The bigger gap means stronger momentum. The main signal on this is simple. So the MACD line crosses above the signal line. That's a buy signal. The MACD line crosses above the signal line. That's a buy signal. Yeah. MACD line crosses below the signal line. That's a sell signal. Yeah, it does take time. You don't just pick this. This is not something that people can just, you know, oh, day one, you want to learn indicators first. That's crazy work. You can, but I mean, that's just, you just skip so much shit that you need to learn first. But there are people that are confused about indicators, and this is exactly what they needed to learn, which is how to use a few of these indicators. But before I finish telling you about this MACD, you need to know that this is something called a lagging indicator. Okay? A lagging indicator, it just means that it confirms what the price is already doing rather than predicting. If you want to know about leading indicators, go watch my YouTube video about leading indicators. This is a lagging indicator. So we don't use it by itself, but it is excellent for confirming that the trend you see in the price is real and it has momentum behind it. So if these histogram bars start getting shorter, like they did here, right, or like they doing here, when you see that happening, if they getting smaller before the crossover, right, that's an early warning that the momentum is fading. So yeah, that's your heads up that a crossover might be coming soon. Would RSI be leading? RSI is another thing that's telling you, is confirming what has already happened. The good thing about a lagging indicator is the fact that it tells you what has already happened. You don't got to, it's confirmation. It's confirmation. Yeah. RSI is telling you when something is overbought or oversold. It's not telling you what's about to happen. It's telling you what already happened. Price action is another one of those things. That's more like, I mean, if you're looking at the price right now that's active, right? And you looking at it to tell you, if it depends, like if you back testing, that's something that can be called lagging because it already happened. Support and resistance, that's also something that already happened. But these aren't necessarily indicators, but people use them as confluence. Price action is about how the price move on the chart, right? Like the direction of price and how it moves. Like is like, that's like somebody buying let's say somebody buy Ford stock, and then let's say they trading Ford stock options, and they say, I think Ford is going to go from $11 to $120 by next week. That's crazy to think that, because Ford never does stuff like that, right? So when you study the price action of a company or of a stock, you see that, okay, this don't move no more than this amount of dollars a week. It usually moves this much. SPY has potential to make $40 moves in one day, $20 moves in one day. It might take a week. SPY can consolidate for $5 to $10 a day for a whole week. We've seen the price action on SPY because we study it. We watch the charts. So certain stocks have certain price action. You want to see how, like if you know that stock don't move more than $5, why are you buying $20 out of the money on a weekly contract. Anyways, right. Let's so I think I know MACD can be a bit confusing, but excuse me. Just look at the cheat sheet right here. Look at the cheat sheet. When to use the MACD. It is for trend following trades. You want to wait for crossover in the histogram to confirm direction. Daily and weekly charts are most reliable. MACD is a lagging indicator. You use it to confirm entries you already see on price action, right? Not as the only signal. You don't only use the MACD. Watch for the histogram getting smaller before the crossover, like it did here, like it did here. See how the bars extend and they start to get shorter, and then there's a crossover. Price went up on the chart. It started to go up from here, and then the bar started to reached its highs right here, and then the bar started to get shorter, and eventually they flipped red. But they started to get shorter. So when you watch the MACD, it's supposed to tell you momentum. Devin's work said he loves MACD. Why you love MACD, Devin? Devin must have made a lot of money from the MACD, y'all. this extra little indicator. So now we're gonna talk about the EMAs, which is one of my favorites. Let's take the RSI off. Let's take the MACD off. I don't want to clutter up the chart. Yes or no to crypto? Yeah. That's my answer, ma'ams. Yeah, it's always been that way with me. And then as soon as I don't, it's up. So how about that? How about just in case, right? Leave some horses in the race just in case. I don't make it home tonight. I'm going to buy something for you for the last time, baby. It's a no for now, though, says JoJo. I need to go at least to 50K. I think it's going to drop to at least 50K. That was the prediction. We said 50K, might bottom out from there. MACD is a lagging indicator. What's the leading indicators? Leading indicators would be the news or a headline or like a earnings event is a leading indicator. Thank you for that gift, Marina. Thank you. Yeah, just do your research on what are leading indicators. CPI reports, shit like that. Now, we on the EMAs. Let's put some EMAs on here. I like doing 3. I like using the triple EMA, but we're going to keep it simple right now. So the EMA, exponential moving average. That's what the EMA stands for. Exponential moving average. I know y'all can't see that line. Let's make it white. There we go. Knowledge for a zero knowledge man such as myself. Yeah, Lil Poppy, stay tuned. So EMA, this is an indicator that you can use. It's called exponential moving average. This is one of the most commonly used tools in trading, and for a good reason. Okay, so a moving average is just the average price over a set number of candles. Do y'all understand? Over a set number of candles is the key word. So, for example, this one is the EMA, what is it, 5? Right now I'm showing you the EMA 5, but I can show you the, let's say 9. And then let's say 25. And then let's say 200. Let's say 50 and 200. All right, so I can look at all of those moving averages if I wanted to. I can come here and say, give me the 9, the 25, and the 200. I don't want to see the 5. I only want to see the 9, the 25, and the 200. All of those lines that you see there are moving averages. Stinky Pinky says 9, 20, 50, 200. Devin's work says the 20 will get you paid in all capital letters. So a moving average is just the average price over a set number of candles. It's going to show up as a line on your chart when you put it on there, right? Y'all see it. I just got 3 EMAs on here, but it could just be one. Let's keep it simple. I don't want to confuse nobody. I just wanted to show you you can look at multiple ones. You don't have to look at all of you. Now we're gonna keep it on the 5. This is a 5 EMA. This is the 5 EMA. So right now I'm looking at the average price over the previous 5 candlesticks. So it shows up as a line on your chart. When the price is above this line, the trend is up. When the price is below that line, the trend is down. That is the most basic level. Don't ever be confused about the EMA. Anybody still confused? I'm going to say it again. I'll say it again. It's when the price is above the EMA, the trend is up. When the price is below that line, the trend is down. It's simple. Now, what makes the EMA different from a regular moving average? Can anybody tell me what makes the EMA, the exponential moving average, different than the regular moving average or the SMA, which is the simple moving average? There's different types of moving averages. Don't nobody know? I'm waiting. Pantheon said it's exponential. It is self-explanatory. It is. But, Mr. Smart Aleck, the EMA is different because it puts more weight on the most recent candles. It puts more weight on the most recent candles. So if something big happened yesterday, the EMA gonna adjust faster. It's more responsive to what's happening right now. Okay? The simple moving averages don't do that. The regular moving average don't do that. Now, common EMA settings that y'all gonna see people use, you will see people use the 9, which is very fast and it moves with every candle. EMA 21 or 25, which is the medium speed. Then you got the 50 EMA, which is going to show you the intermediate trend, and the 200 EMA, which is going to show you the bigger picture. If the price, look, let's pull them back up. I'm going to show you the 200, the 50, the 25, and the 5. There we go. And we're going to make the 200 EMA purple and make it so y'all can see it. Now, this purple one is 200 moving average is showing you the long-term trend. Can you show the setup for EMA on Webull? This is Webull. Chris doing work. Yeah, this is Webull. You go to the settings and it's right here. You can just change the inputs to whatever, however many you want. Right? And then you come here to the style, you click the box that you want. Like I want to show the 9, the 25, the 50, and the 200. You click them, you change the color, the width of the lines, and all that. Okay? Dino, you better go Google. Dino, go to Google and type in define exponential and read it with your own 2 eyes. Don't do that. Don't do that. Don't do that, Dino. I'm for real. Go to Google and I want you to type in define exponential. You feel me? Yeah, we're not going to use me for shit that we can go and ask ChatGPT. But since you asked, and it's going to be people in the chat watching this replay, exponential refers to a mathematical relationship involving exponents, where a constant rate of change results in extremely rapid growth or decay. It describes a curve that gets steeper over time, commonly used to model population growth and compound interest in radioactivity. See how that didn't help you? Go to ChatGPT and say, explain what the word exponential means to me as if I am a kid. And it will break it down to you in simpler terms, right? With way less jargon. Now, back to the EMAs. Back to the EMAs. I don't even want all of them. Just those. So right now, would you call this a strategy? It could be a part of your strategy. It could be a part of your strategy using a certain amount, a certain combination of indicators, along with price action, along with any news event. Yes, that could be considered a strategy. But either I wanted to tell y'all about the different EMAs though. All right. So again, a lot of people use the 9, the 25, the 50, or the 200. The strategy, since you asked about strategies, the strategy that a lot of traders use with the EMA is called stacking. You still there? You still there, little poppy? See, this shit called stacking, right? So if the 9 EMA is above the 21 EMA or the 25 EMA, and you right. So look, right now we're using the 5, the 50, and the 200. And notice how the short-term trend, which is the 5, is below the medium-term trend, which is the 50, and that's below the long-term trend. So we bearish. The candles, the price is below all 3 EMAs. This is called stacking. This is a bearish stack. The shit is trading below all 3 moving averages. See, so we right now. So if it was the opposite way, if all the candles in the price was above it, then the trend would be strong at every level. That's where you want to look for buy entries on the pullbacks. Here, you want to look for sell entries on the pullback. When the price comes to these levels, it'll bounce off these levels and continue to fall. When you see these crossovers happening, that's what you want to pay attention to. When you see these crossovers happening. All right. Any questions? When a fast EMA crosses above a slow EMA, it's called a golden cross, a bullish signal. When a fast EMA crosses below, it's called a death cross. This fast EMA is the white one, and it crossed below. That's called a death cross. It crossed below. That's a death cross, okay? That's a bearish signal. The crossover meaning the blue line going over the white line. Yes, 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 precisely. That's exactly what you want to look for. But remember, you can make these colors whatever fucking color you want it to be. It don't pick these colors just because that's what I pick, man. Make them something that you can remember. Okay, this is my long term one, this is my short term one, this is my medium term one. Sometimes the price will cross over the short term trend and it'll get back to this level, the medium, and bounce back down. See, the EMAs, they act as dynamic levels of support and resistance. What's up, Shadow? I'm feeling a lot better. I had a chest cold, so that's why y'all hadn't seen me in about a week. Yeah, yeah, for sure, little Poppy. I just want to make sure you get it. But that's it. Now we'll go ahead and talk about the SMAs since we went over the EMAs, the simple moving averages. Let me take the EMAs off. Matter of fact, I think it's just moving average. MA. Boom. It's the regular moving average. All right, so cool. Here we go. I don't want to waste too much time. Now, this is the original version of the EMA. Same concept, but every single candle is weighted equally. So if you're using a 20 moving average, it's going to add up the last 20 closing prices. It's going to divide it by 20. Simple math. Every candle matters the same amount, whether it was today or 20 days ago. It don't matter. So all the candles are equal weight. So this going to move slower and smoother than the EMA. But notice that the price is still below it. I ain't gonna spend too much time on this one. Great info, Iron. Love coming in for sure. Is this live recorded? My battery is low. Yes, it is. Yes, it is. It'll be on YouTube. Will the moving averages be different on different time frames? So let's take a look. The price is below the moving average. Well, it is going to tell you, of course, but it just depends on how you looking at it. Because if I come all the way out to like a weekly time frame, well, yeah, either way it go. When you below the moving average on all time frames, it's definitely in the trend, and it's in a downtrend right now. No matter what time frame you put it on, we're under the moving average. We're under where we usually are. No matter how you put it. Maybe if I go down to a smaller time frame. Yeah, so we just crossed above the moving average on the 5-minute time frame. Okay? Which can be a early indication that there's a reversal. Super early indication. That's what you use the smaller time frames for, entry levels. Because you can't see that we're bullish on any other time frame until you come down and see, oh, okay, well, when you zoom all the way in, you see that there's a reversal that could be happening here, because the price just failed to make a lower high, and we actually just made a higher high right here for the first time in a long time. So you take that into account. So it says, how does it work? Right? How does it work? The SMA adds up the closing prices of the last certain amount of candles, and it divides it by that amount of candles. Right? The 50 moving average is going to add up the last 50 closing prices and divide it by 50. Now it says, how does it work? As each new candle closes, the oldest price is dropped and the newest is added. This creates a smooth, slowly moving line across your chart. Because it's slow, it's going to filter out short-term noise and show you the big trend. Bigger, it says when to use it. Big picture trend is price above or below the 200 SMA. Because again, you can control the parameters of the moving average. You control it. I can say I want to see the 200. Yeah. So, and it's not. It's not, right? So a lot of hedge funds, it says, actively manage positions around the 200 moving average. That's all the way at the 678 level, 679. So we are well below the moving average. That's a long-term moving average too, by the way, 200. So there's something called a golden cross, where the 50 moving average crosses above the 200. That makes financial headlines because it signals a true long-term trend shift. When you see it on a daily spot chart, that's a multi-month trade setup, not just a day trade. All right, now we're going to talk about ATR. Let me take the moving average off, and we're going to add on the ATR. It's down here at the bottom. Let's make it bigger. Who uses ATR? Anybody ever used the ATR before? The average true range. Oh, I'm tired of this year. Never. Okay. You might after today. Yeah. So ATR is average true range. I'll be honest with you. This one is often overlooked by a lot of new traders. A lot of new traders don't even look at this shit, but this is critical for protecting your money. Okay? Now the ATR don't tell you which direction the price is going, but it does tell you how big the moves typically are. You understand? I'll explain. So it measures the average range of each candle. This line is going to measure the average range of each candle. Okay? from high to low over the last 14 periods. That's what the ATR is going to do. Let's go to the settings. Let me show you the introduction. The average true range is an indicator that measures volatility. As with most of his indicators, again, we got Wilder. This guy named Wilder made a lot of indicators, y'all. But Wilder designed ATR with commodities and daily prices in mind. Commodities are frequently more volatile than stocks. They are often subject to gaps and limit moves, which occur when a commodity opens up or down its maximum allowed move for the session. A volatility formula based only on the high-low range would fail to capture volatility from gap or limit moves. So Wilder created average true range to capture this missing volatility. It is important to remember that ATR does not provide an indication of price direction, just volatility. So you can use ATR and then use a different indicator that shows you price direction. See what I'm saying? But to know what an indicator lacks helps you figure out what indicator to pair with it. You get me? Now back to the ATR. So ATR don't tell you which direction the price going. It tells you how big the move usually is, and it measures the average range of each candle from high to low over the last 14 periods. So if SPY has an ATR, an average true range of $8, that means on average, SPY moves about $8 in a typical day. Now, this is why this is important information, y'all. This is how this shit can make you a lot of money. Let's say you buy SPY, and this is for educational purposes only. Let's say you buy SPY, and you put your stop loss $1 below your entry. Okay, $1 below where you get in the trade at. That means you look, if the price come here, I'm getting out. Now, let's say the ATR is $8. Now, what's gonna happen is you gonna get stopped out constantly by normal price movement. That $1 move is just noise. The stock didn't even do anything wrong. It just remember that. Remember the stock market breathes. It go up and down. So the rule is simple. Your stop loss should be at least 1.5, 1.5 to 2 times ATR away from your entry. This was for future traders mostly, but you can use it for day trading, but this is for futures traders. So if the ATR is 8, your stop need to be at least $12 away. That might feel scary, but that's where the market actually That's what the market actually needs to breathe, okay? So the ATR also tells you about volatility. ATR, whenever it's rising, the candles are getting bigger and the price is moving more aggressively. When the ATR is falling, the price is calming down. So you can use this to size your position appropriately. Some of y'all are trading, what do they call them, prop firms, and don't know how to use this. This will help you out a lot. It'll help you stop getting stopped out so much. Go do your research on average true range. All right. Again, for each candle, ATR measures the true range. Let me leave it there for a second in case somebody want to take notes. What's next up? What we got? I think I'm about to talk about the stochastic RSI. We talked about RSI. There's another version of it called the stochastic. Do I really need to show them that? Do I really need to show them the stock RSI? Yes, treasury bonds is a leading indicator, real tech. Somebody asked, what is a leading indicator, coach? Since you told us about the lagging indicator, well, you can look at the treasury bonds as a way for you to gauge intraday trends or movements. Yes, that is a leading indicator because it happens and then the price reacts afterwards. Which do you look at? The most active ones, shit, the 10-year. Can midterms result get Trump out of office? Oh, Dino, you asking the wrong one. Dino. It's JoJo in the chat. She might be able to answer that question for you. She know everything about Trump getting out of office. Bro, you tripping. Isley said I'm tripping. Tell me how I'm tripping. Put me on, Isley. What did I say that was wrong? What did I say that was wrong? Please correct me if I'm wrong, ladies and gentlemen, because I'm confident that I'm not. Oh, he said Trump in the chat. Okay. Yeah. Not you. Oh, okay. Cool. All right, so yeah, we're gonna talk about the RSI, the stochastic RSI. Let me get. I think y'all already got those notes, so we're gonna move on. Here we go. Have y'all ever heard of this indicator before? I know this is a lot to take in. I'm gonna post a replay on YouTube so y'all can go back over it. But yeah, don't let me be the only one to explain it to you. There's people on the internet that can explain it to you better than I can too. Okay, I'm not the master teacher. I'm just a master teacher. You know what I'm saying? There's somebody out there that'll explain it to you too, and their description of it plus mine's, maybe the light bulb will light up over your head. But we're gonna talk about the stochastic RSI. Think of it like, you could think of this like RSI's faster, more hyper, younger sibling. You can use the RSI, but this one work a little bit. It's a little bit faster to reaction. I like the reaction time on this one. Okay. Now, the regular RSI, remember we talked about it. It measures price momentum. But this RSI, the stochastic RSI, takes RSI. It takes that RSI and applies another formula to it, making it even more sensitive and faster to react. The result is an indicator that moves more quickly and gives us signals earlier. Real Tech says this is ball knowledge. What you mean by that? I've never heard that term before, Real Tech. What's ball knowledge? Okay. Well, the stochastic RSI runs from 0 to 100. Remember the other one was, we was looking at the regular RSI, like, okay, well, if it dropped to 30, we know that it is oversold. If it rises to 70 or above, it's overbought. When we dealing with the stochastic, it runs from 0 to 100. Above 80 means overbought, similar to RSI 70. And below 20 means oversold, similar to RSI 30, right? And you will see two lines. Just like you see these two lines? The K percentage, right here it says K. Right here it says D. All you got to do is turn your phone to the side and zoom in. You turn your phone to the side, portrait mode, and then you'll be able to zoom in. This for the people on TikTok. This ain't for the people who watching it, the replay. But yeah, do you use VWAP with the first and the second? VWAP with RSI? I use the EMAs with MACD and the RSI. Volume profile and volume sometimes. That's a lot of fucking indicators. But that doesn't mean I'm using them all, right? I'm just letting you know. Like it'll look something like this. It'll look something like this. MACD on. I want all three EMAs and the volume profile. There's a lot going on. But I'll make it to where I don't need to see these humongous like this. Okay? So they at the bottom, the volume is right there. Yeah, so it ain't too crazy. I know what I'm looking at. I know what data I'm taking in. I'm taking in so much data. I'm looking at the volume. I'm looking at the volume at certain price levels. So I'm gonna tell you all I get to know from these indicators. Using these, I can tell you whether the stock is oversold or overbought, whether the trend is about to end and it's about to reverse, whether we are staying in the trend or about to get out of a trend, right? Overall, short term, medium term, long term. I get to know the volume at different times, and not just the price levels, but different times on top of support and resistance. Yeah, it's not, at that point, only thing more from there you need is risk management. It's just making sure that you're controlling how much you lose, and you're not going to always be right. So when you fucking wrong, just make sure it's a small loss, because the trade should only go in one of 4 directions. It should either be a big win, a small win, a break even, or a small loss. A big loss should not be an option, ladies and gentlemen. You have complete control over how much money you give the market. You don't have to take a big loss. All you got to do is go watch my last video on order types and make sure that you implement a stop loss. Are you supposed to be live on YouTube right now or just TikTok? I'm only live on TikTok right now. I post the replays on YouTube. I thought about going live on multiple platforms at once, but I'm giving y'all my undivided attention. I don't want to answer questions on 3 different platforms at one time. TikTok should be happy. I'm forcing people to come to TikTok. I could have just did this live in my private community in the Discord. The last live that I put on TikTok on YouTube is actually private. I'm gonna make it public for y'all, right? I did a masterclass on order types and it was private. I will make it public for y'all, so that'll be available tonight as well. All right, so did I miss some questions? Are you supposed to? But I read that one. Nah, you know ball, sigma deviation and VWAP. Okay, is this doubled up and with another application such as volume? Yes, Joe G. The volume right here at the bottom. We got EMA, volume profile, stochastic RSI with the MACD. It's a lot of indicators. You don't need all these indicators. You don't need any of them. You can use price action alone, support and resistance alone. You can use 1 or 2 indicators, maybe 3, but 1, 2, 3, 4, 5 indicators is a bit excessive. All right, but back to the RSI. I told y'all that there's these 2 lines right here on the stochastic RSI, right? The K percentage and the D percentage. That's what each line, the blue line is the K percentage. The yellow line is the D percentage. The K line, so the key signal is the crossover, right? So the K percentage line, which is fast, and the D percentage line, which is slower, and it acts as a signal. The key signal is the crossover. When the K percentage line crosses above the D percentage line, while both are in the oversold zone, that is a buy signal. When the K percentage crosses below the D percentage line in the overbought zone, that is a sell signal. Understanding this type of information can keep you from needing people to give you signals and shit. You don't need nobody to give you no damn signal. You just need to learn a few indicators and you give yourself signals. The indicator is going to give you the signal. You don't need nobody to give you no signals. But how do y'all think they coming up with the signals? At least the ones that give you the good ones. How do y'all think they coming up with those? How do you think they know when a stock is about to do something? They don't know, but they got some confirmation. Say that part about the crossover again one more time. It's actually on the screen, pal. It's on the screen. It's on the screen. It's a little bit of reading. I'm gonna say it again for you though. I'm gonna say it again for you. It's called a crossover. So when the K percentage line, which is shown by the blue line, when the blue line crosses above the orange line, while both are in the oversold zone, that's a buy signal. But I don't like saying colors because the truth is you can make these colors whatever you want them to be. They don't have, it might not be blue and orange for you. It might be green. And it might be green and red. I don't know what you make it. You can make it whatever you make. Life is what you make it. Right? But the point is the K and the D. I made my K percentage line green and my D percentage line red. But K is representing what? The fast K is representing fast, the fast line. D represents the slower line, and the D line is the one that is acting as a signal. When the K line crosses above the D line and both of them in an oversold zone, that's a buy signal. When the K percentage crosses below the D percentage in the overbought zone, that's a sell signal. So again, because the stochastic RSI is so fast, it generates a lot of signals. You can't trade every one of them. You'll go broke. You'll blow your account. You're going to be in and out constantly, and you might get chopped up. So the trick is only take stochastic RSI signals that align with your bigger trend. You're welcome, Devin. If the MACD says bearish, and ADX says there's a real trend down, only the stochastic RSI sell signals. Only take the sell signals. If I ain't even go over ADX, I'm getting a little ahead. So let me pull up ADX. Let me get some of this shit off the chart too. All of this extra shit off the chart. We don't need none of this. I'm gonna take this off too. We're gonna talk about ADX. I didn't even go over that. Average directional. ADX stands for the average directional index. Minus directional indicator and plus directional indicator, okay, represent a group of directional movement indicators that form a trading system developed by you know who, Wells Wilder. This motherfucker, he made three, so far he made 4 of the indicators that I done taught y'all about tonight. Although Wilder designed his directional movement system with commodities and daily prices in mind, these indicators can also be applied to stocks. So positive and negative directional movement they form the backbone of the directional movement system. Wilder determined directional movement by comparing the difference between 2 consecutive lows with the difference between their respective highs. The plus directional indicator, it'll be shown as plus DI, and minus directional indicator, it'll be shown as minus DI, are derived from smooth averages of these differences. And they measure trend direction over time. So these 2 indicators are often referred to collectively as the directional movement indicator, or DMI. The average directional index, or ADX, is in turn derived from the smooth averages of the difference between plus DI and negative DI. It measures the strength of the trend regardless of direction over time. So we're going to simplify that shit. We're going to make it simple. All right, we're going to make it simple. All right, we're going to go ahead and add ADX to the chart. Average directional index. Now, Iron, how are you doing year to date? Year to date, awesome. We still up from the dip from last year. Cool hand, Luke. If you got in April last year, you still up. There's no need to panic. The boomers, especially the boomers. You think they don't give a fuck? They got inspired when it was $100, $50. They ain't gonna. You think they worried about this dip? I ain't seen you in I don't think I seen you in a year, cool hand, Luke. You been gone. Where you been? Maybe 6 months. I'm being exaggerative, but I ain't seen you in some months, man. Where you been? Now, I'm gonna talk about ADX. Let's talk about ADX. Y'all see what it says? Y'all see it? Is this trend real or just noise? ADX gives you the answer with a single number. Wouldn't it be nice to know that? Wouldn't it be nice to know that? Okay. Well, I'm gonna teach you how to use ADX and what it means. But just read along up here. These are the footnotes. Okay. All right. ADX, average directional index. This one answers a question that will save you from a lot of, excuse my French, fucked up trades. If you use ADX, it'll help you from a lot of, if you take fucked up trades and you don't use ADX, I'm here to help you. At least add this one indicator to your trading system, all right? Just this one indicator alone. This is for educational purposes only, y'all. I ain't telling you what to do. You feel me? I ain't telling you what to do. I'm just trying to help you out. So we're going to talk about it. What does the ADX mean? Drop a W in the chat if you would like to learn what ADX means. So do these guys that use AI agents, are those agents using all of these indicators simultaneously? I wouldn't say simultaneously, Joe, but you bet you that, yeah, yes, they are using indicators. Yes. That's how the bots know exactly what to do. Agents too. Now, the question is, when you're using the ADX, the question is there actually a trend right now, or is price just going sideways and chopping around? Right? Is it actually a trend right now, or is price going sideways and chopping around? All right, so it don't look like it's chopping around to me. Call it what you want. We done broke below an important level. Yeah, we even broke below the wick of that one. So, but I'll bring it up to here and say that we need to at least get back below 648, and from there, like timber. Now let's talk about this real quick. What are you charting? Oh, this is the S&P 500 SPY. This is an ETF. Excuse me. That's an ETF. It tracks. I'm charting the 500 best companies in the United States all at one time, Everett. That's what SPY is. SPY is the 500 best companies in the United States all at one time. So, again, if I'm asking myself, is there actually a trend right now, or is the price going sideways? ADX is going to give you a number from 0 to 100. Let's move the MACD out the way too. I don't want you to see nothing but the average true range. Let's just talk about this right here. Right? So ADX is going to give you a number from 0 to 100. And below 20 means that there is no real trend. Below 20 means there is no real trend. The price is ranging and it's going nowhere. Above 25 means a real trend exists. Above 40 means a strong trend. Above 50 is very rare, and it means an extremely powerful trend. Are y'all understanding what I'm saying? That's how you use it. It's really kind of simple. I don't think it's complicated at all. I think if I go to using big words and shit, making it complicated, that's when I lose y'all. But this shit is really not complicated. Now, most indicators like the MACD and the EMA that I showed y'all, when you see them crossovers, those are trend following tools. They work good. Matter of fact, they work great when there's a trend. But when there ain't one, when there is no trend, all right, when the ADX is below 20, those tools will give you false signals over and over again. Like it's all in my head. No, for real though, it'll screw you. So, yeah. You're going to get whipsawed back and forth. So before you use any type of trend following indicator, check the ADX first. If the ADX is below 20, switch to a range bound strategy. Use RSI and Bollinger Bands instead. Wait for the ADX to confirm a trend before trend trading. You got to be in a trend before you go to trying to trade a trend. 50, 20, and a 9. Says Cool Hand Luke. To my your EMAs. which indicators you use. There's always an indicator. Yeah, cool hand, Luke. That was this whole live show been about pretty much MACD, RSI, VP. I've went over all my favorite ones. There's a lot more. There is so many indicators. I wouldn't not be able to go over all of them during this live stream. There actually may be some indicators that you like more than the ones I named in the live show tonight in this stream. So do your research. All right, now back to the ADX. ADX has two other lines called plus DI and minus DI. So when plus DI is above minus DI, right, and ADX is above 25, confirmed bullish trend. When minus DI is above plus, let me see if I can pull that up real quick. Let me pull that up so that I'm not just blurting shit out. I want y'all to actually see it. All indicators, ADX. You see how this one says DI, average directional index. I wonder if this one will show. Nope. There we go. That one does. All right, cool. So this one shows what I'm talking about. The plus DI and the minus DI. All right, there we go. So the plus DI is shown by the green line. The minus DI is shown by the red line. And the average directional index is the purple line. They are all hard to see, so you can come here and change that. You can make them bigger so that you can see them better for those who can't see that good. Okay. What's up, Daniel? For futures and micro gold, is a unit the same thing as a contract? Yes. All right. So, where was I? I was telling y'all about the other two lines, the DI, plus DI, and minus DI. Plus DI is the green line here. Minus DI is this peach colored one. Okay. So when the plus DI is above the minus DI, like it was here for a short period of time, the plus DI is above the minus DI. And it's above the ADX. And the ADX got to be above 25 though. Whenever you see that, it's a bullish trend. Whenever the minus DI is above the plus DI and the ADX is above 25, then that's a bearish trend. Okay? So just helps you out. Now, on balance volume. Follow the money. On balance volume shows you what the smart money is doing before the price moves. Before the price moves. Let's take ADX off. Fix this chart. All right, so this is the on balance volume down at the bottom. Right here, on balance volume. Let's talk about this for a second too. Can you explain this again? Sorry, I just joined. Yeah, of course. Just hit the link in the bio, right? Subscribe to me on YouTube and you will be able to catch the whole live stream because I'm 2 hours in now. All right, we 2 hours in the show. Let's go to the table of content real quick so we can see how much we got left since we know where we at. This has been a whole masterclass. I'm on number 13. 14 is the last one. So you're at the ass end of the show. But it's okay because I'm going to repost the replay. I'm going to repost the replay. And next week when I go over indicators, I'll go over an entire new list. I won't go over any of these same ones. But if you need help going over any of the ones we already went over on a 1v1 level and you want me to break it down on your level, inbox me. I got you. Inbox me. Okay, OBV. On balance volume, right here. How do we use the OBV? On balance volume, this is one of the sneakiest, most powerful indicators that you're going to learn today. OBV tracks whether volume is flowing into a stock or out of it. Do you know how valuable that information can be for you? On balance volume tracks whether volume is flowing into a stock or out of it. Now, when the stock closes up for the day, all of that day's volume gets added to OBV. When it closes down, volume gets subtracted. So the results is a running total line that tells you whether more money is coming in or going out over a certain amount of time. So why do we care about this indicator? How can this help? Tabitha, what up? No way, Jose. Tabitha, I know you ain't. I'm about to put you on blast. How you miss me and you ain't called the phone? You haven't dialed the number. It hasn't rang and said your name. All right? You call. Ain't no way. Ain't no way, Jose. No, you good. I'm just saying, I'm here. I'm here. I ain't went nowhere. I mean, I've been somewhere, but I ain't went nowhere as far as I'm not accessible to y'all. Anytime y'all need me, I'm like right there in your pocket, right? Just a phone call away or a click away. So take advantage. Take advantage. All right, let's see. Where we at? OBV. OBV. So we know why this matters because the smart money, you gotta follow the smart money. The smart money, the big institutions, they can't buy millions of shares overnight on my watch without me knowing, without moving the price against themselves. So they accumulate slowly. They do it quietly over days and weeks. And when they buying, the OBV starts to rise before the price actually explodes. That is the magic behind this shit, okay? OBV often leads the price. So if you see OBV starting to trend up while price is still flat or even slightly falling, that is a signal that big money is quietly accumulating, that a rally is coming. You feel me? Now the opposite is called distribution. OBV starts falling while the price is still holding up or even making new highs. What that mean? With the OBV looking the way it's looking right now after what I told y'all, what would you think? It just means that the smart money is quietly selling into the strength while retail traders are still buying. That's a warning sign. So the big money is leaving the building. You want to watch for OBV divergence. Remember we talked about divergence? So the price needs to be going one way while the OBV is going the other. That is your earliest warning of a coming reversal. So before the price actually starts to reverse, we'll see it happen in OBV. The OBV is not looking like there's any type of reversal on the way right now. Unless you on a 1 minute time frame, 5 minute time frame. That's not enough. Now, here go the notes. Here go the footnotes for the OBV. So it's magic though. It's magical. So add that to your watch list. Add that to your arsenal. Some of y'all didn't use half the indicators we talked about tonight. But if you made it to the end of the show, congratulations. You just went through 13 indicators in one session. Take a breath. This shit overwhelming. If you expect yourself to master this shit overnight, you crazy. You crazy. You the type of person to go plant an apple seed and think that we finna pluck apples from this shit tomorrow. No, you gotta water it. We gotta water this shit. We gotta come back to it, treat it with love. You know what I'm saying? Come talk to it. You feel me? That's the same way with you and your learning, right? You putting in the work, you gotta water it, it'll grow. You're gonna be able to use this information. But congratulations, y'all. I mean, for real, you made it. Shit, 2 hours and 30 minutes. Now that's a lot of information, but I'm proud of y'all for sticking through it. Now look at this cheat sheet. Let me give you a cheat sheet real quick. Here y'all go. I ain't gonna leave you with nothing. Without a dope beat, is step 2. It's been a long time. Hold on, let me see. There we go. Can y'all see my screen, right? Y'all can see it, right? Everybody got that? Everybody got this cheat sheet, right? Screenshot it, do whatever you got to do. Take notes. I'm gonna leave it up here for a while. Just look at it. This is your reference guide. This is the Ironworth reference guide for indicators. Every indicator that we covered, what it does, when to use it, what to look for, all in one place. Save it, print it. I don't give a fuck what you do with it. Keep it next to you while you're trading. It's gonna be in the Discord for those that want to actually download it. All right. But here's the most important thing I want you to leave with today. You do not need to use all 13 of these at the same time. In fact, if you have 13 indicators on your chart, you're going to be confused and paralyzed. You're going to have analysis paralysis. I want you to pick at least 2, maybe 3 to 4 that make sense. They got to make sense together. I taught y'all how to make them make sense together because once you know what is lacking, you know what else you need. And you master those. Okay? I done gave y'all my personal go-to combination. There's some people use VWAP. Some people use VWAP for where price is relative to value. Volume to confirm the move. RSI to check if we overextended. And then the EMA to see the trend direction. 4 indicators. That's all that some people may use 4. Some people use a clean chart. No indicators. Clear thinking. They may take better trades than the person that got 3 to 4 indicators. So remember, indicators don't make you money. Your decisions make you money. Indicators just help you make better ones, right? So they help you see what's happening before it is obvious to everybody else. So practice, y'all. Paper trade this shit first if you got to. Get these on your chart. Look at them every day. Ask yourself, what is VWAP telling me? What is the EMAs telling me right now? What does the volume say about this move? Is there a real trend or not? Over time, it will become second nature. I'm Ironworth Trading. This has been the Indicator Masterclass. Thank you for being here. Now go use what you learned. I'll see y'all on the charts.